you rely on the franchisor for support as things change. Like this is one that has tested franchises as much as you can possibly imagine,
Yep.
but this is what they're there for, is that you invest on that because they are invested in your success. They
Mhm.
want you to do as well as possible.
All right, welcome back to the Richer Geek. Guess what? We have Kenny Rose back, and he has some new and exciting things to tell us. If you might remember, he's our franchise guy. He's the king of franchises, and we had a lot of great feedback on our other podcast episodes with Kenny. And Kenny, it's glad to have you back.
Thanks, Mike. It's good to be back. I didn't expect to get invited back again, let alone a third time. And this is even different because normally I'm talking with Nicole, so it's even more different than I could have imagined.
Yes, as everyone can hear, I am not Nicole. Uh, Nicole is fantastically starting a new chapter in her life with a new tech job, and so I have a little more free time on my hand. So I'm now doing the podcast. So, Kenny, in the past we were talking about it's like you're not satisfied, franchises, and these are the best type of franchise. These are the different things. You've taken it all to a new level. I know our listeners are going to be ecstatic to hear that, hey, I can still work and now I don't have to spend another 80 hours trying to build a franchise. So you have a different take on how people can get involved in franchising. Talk to us about it.
Yeah, so as you know, I've been in the franchise brokerage side the last 7 or 8 years, and I've educated thousands of people. Actually, I did the numbers on how many people I've reached media-wise after Forbes, ABC, you guys. Number hit over 200 million people. So that was just, when I was putting that together, that absolutely blew my mind. And so like I've been very big on educating people when it comes to franchising, because franchising power is about 5% of the US economy, yet most people don't know that much about it. And they really think mostly about food when they hear that word. And so I wanted to, make sure people get a different idea of what franchising is, how you can invest in it. And so when I started my other company, Semfia, that the listeners have heard me talk about, was mostly about semi-absentee franchises. And I think, as I said on the previous shows, there's no such thing as an absentee franchise. And so, as I thought more and more about it, I said, why not? And I thought about how fintech has really come up in the last few years and how you can invest in things that you really weren't able to do before. And, a big thing that came up was in 2015, they had the Jobs Act come through the Obama administration. And this allowed you to crowdfund investments for equity. Because in the past, you think of things like Kickstarter, you got a item in return, but you couldn't get ownership from it. So the Jobs Act allowed you to, now invest and get a piece of it. Now, there's many different parts within the Jobs Act, but one that's really important for this is it's called Regulation A+. And what this means is that you don't have to be an accredited investor to be able to invest in these really big investments. And so now because of this, you've seen things like Fundrise, Diversity Fund, Cadre, where you're able to invest in fractions of these real estate portfolios, really like a REIT, but available for everyone. And so I actually had the idea a few years ago of, hey, why can't I do that with franchises? And so as I kept doing my research and talking to lawyers and making sure everything would, button up correctly, it's finally 2020 was the year with so much in disarray. I realized that, people are really turning the stock market into a gambler's paradise. And it was crazy as, COVID started eating up the economy, and you start hearing about people, well, they can't gamble on sports, they're gambling on stocks. And to me, this reminds me of, I used to be a financial advisor at Merrill Lynch, and this is like when Greece's economy was going through the tank, and everyone was like, oh, what's happening in portfolios? I said, headlines. It's just crazy stuff that you don't have control over. And now it's kind of the same thing. Like, it's working out better for most people at this, but when it comes to your retirement being in the hands of gamblers, basically, this doesn't make any sense to me. And I feel like a lot of people just aren't as trusting of Wall Street. They corporate fat cats basically, and going on these crazy excessive retreats and stuff. And that's just never who I've been. I don't wear a tie to the office anymore. I'm very, very big on that. It's usually jeans and a shirt. And so I thought about, how do you bring this to the investment world? And so my new company, FranShares, allows you to do just that. You're able to invest in a portfolio of professionally managed franchises in a recession-resistant portfolio for as little as $500. So the portfolios are going to be locally based. So you're based in the Phoenix area, my hometown. And basically, imagine where you get your hair cut, where you get your oil changed, where you go to the gym. All these things could be things that are part of your investment portfolio. So you think about, like, honestly, let's think about if you buy a MacBook, how many hands does that money change before it eventually affects the stock and comes back to you? And also, it's not like you're getting a ton of dividends all the time. So I wanted to kind of like, hey, let's change the way people invest. And so if you think about it, if it's all local businesses for you, it's local people that spending in the local area, and then it comes right back to the investors. And again, I really wanted to change the way the investment world works, as well as I wanted to make sure, because I know people are going to copy me on this down the road, but I wanted to make it as defensible as possible. And so I asked thousands of people, what do you hate about investments? And by far, the number one thing that came up was fees. It's always fees. Why do I pay 1%, 2% asset under management fee? It's crazy. Like, even if I lose money, they still get their cut. So I listened to that and I said, that's not fair. And so I thought, how could I work around this? Like, what's the way to make an investment that's really for the people? Like, I wanted to think from the investor's point of view, not really the Wall Street point of view. And so how we do this is that we actually go in on the investments with the crowdfunders. So the crowd invests about 80% of the total project costs. FranShares comes in for the other 20%. And so we actually split the income with you as the franchises make money. So basically, we make money when you make money. I'd rather bet on myself than just start taking money just to exist,
Mm-hmm. Yeah, that's wow. That's a lot to absorb, and it raises so many questions. So let's start out with professionally managed franchises. Okay, so how does it work? How do you get the franchises?
So it's all about vertical integration. So one of the problems that you have when it comes to crowdfunding real estate is typically they don't actually own the real estate themselves. They're more acting as brokers. And so that's why companies like Fundrise charge you that 1 or 2% and then money on top of there.
Mm-hmm.
So what we do vertically integrate it by, we are working with the investors to crowdfund the money. We're dispersing the money into franchises that we are going to own and operate with you. So we assemble the management teams. And, a big part of this, I wanted to make this go as operationally smoothly as possible. And, I've been on here talking about semi-absentee franchises for, I guess, years now. And I thought of it from there. It's like, hey, let's, the same things that I know and I've been helping people select for years, I want to be able to help them do that in this portfolio. And then we can assemble these management teams to oversee managers. So they're not so much owner operator franchises where we need to have someone with the absolutely insane experience, but someone that, has managed a type of location like this before.
Mm-hmm.
And, on top of this, I started going down this rabbit hole a bit. And I thought, hey, as long as we're changing investing, I kind of wanted to change entrepreneurship a bit. And, actually, this is one of my biggest things I've gotten media exposure on, but I'm not sure if you've seen this one. Do you know how much a Chick-fil-A franchise costs?
$1 million.
$10,000.
That's it?
That's it. And here's why. So Chick-fil-A, they're a overnight success that's decades in the making. And so because they've been able to grow organically, they have, a lot of liquidity that they can reinvest in themselves. And they said, hey, how do we have the best locations? Well, we have people that work their way up and become managers. So instead of people basically coming off C-level positions and transferring that skill set to the restaurant industry, they said, why don't we finance all this build out stuff and get the guys who've worked their way up from the inside and make them the franchisees? And so this way, Chick-fil-A gets so much media exposure on, you always see their owners like, oh, this owner went out and helped them, said a prayer for them. And they do all these things that are just so over the top because these are things that would generally be unavailable to them. They've started at a minimum wage job. work their butt off
Mm-hmm.
and work their way up to where they're the owner. And so I answered this on Quora. It's one of the
Yeah.
yeah, so they get like 300 million people a month on that website. And so I answered this on there. That's been sent out to like 80 million people alone. And actually, if anyone reads The Hustle, the online newsletter, they actually did a whole Sunday story about this. And I saw they were looking for a source on, and I reached out to the writer, Zach Crockett, and I said, hey, you know what? I actually have written some stuff on this before. And we got on a call. He's like, it's crazy. When you reached out to me, I had your Quora answer open in another tab. You're like the person I needed to talk to. And I was like, oh, perfect. But so I really took this, the way that they did this, and I said, hey, it's so effective. How do I bring this to the greater franchise world?
Mm-hmm.
And so that's what I want to see in the future, is that as we own these franchises, we can have people who come in as minimum wage employees. And instead of just, hey, a job's a job, gives them a way to work their way up, and,
Mm-hmm.
allows people who come from lower income areas or minorities to work their way up and become entrepreneurs. And so that's really what I want to be able to do, is change the way people invest and change the way people own businesses.
Yeah, I think Dutch Brothers might do something similar.
Yeah, I've heard that too.
Yeah, I looked at buying a Dutch Brothers because I thought it was the next thing, and they're like, I can't. The only people that can be owners are, you have to work so many months or years within the franchise.
Mm-hmm.
And I'm not going to be a barista just to own a.
Oh, even when you do that with Chick-fil-A, for example, the amount of applications they get, I think they approve like 70 or 80 out of 60 or 70,000 applications a year.
Boy.
So it's harder to become a Chick-fil-A franchisee than it is to get into Harvard. So
I tell you,
that's just mind blowing.
It's amazing. I've never seen such long drive-through lines. They have that, and it seems like every time. It's like, I'm not going to get political, but every time a politician says, we hate Chick-fil-A, or we hate, whatever, they break sales numbers.
Yeah.
It works the opposite way,
Yeah.
But so I would think, like, if I was looking at investing with you, and knowing some things about, especially with COVID and the small businesses, which when I think of franchises, I think of a bunch of small businesses, individual businesses, unless you have the strength to own 20 of them, or 50 of them. But then, you could break it down to, well, I own 50 small businesses if you do it properly, and they're all in the different LLCs and whatnot. My fear with looking at what Corona, with what this virus did to small businesses, how are you picking franchises, or what are you doing out of the fear of the recessions and the pandemic, to try to, like, with our listeners, and they want to invest with you, how could you alleviate their fear of owning pieces of the small businesses?
Yeah, so it's a two-tier approach. The first is, what are pandemic-resistant businesses? So these are things like home services, especially with people who are working from home more often. They need to make sure the home is in good of shape as possible, whether that is, interior renovations, lawn care, senior care, especially at home. There's even franchises in the trash industry. You want to talk recession resistance, trash is always going to be trash. People are not going to throw away less. And so looking at industries like this, we're going to be able to start building really a foundation that is pandemic resistant. And then, especially as the vaccine's coming out now, and we're able to start rolling out. I hate to say this, but it's kind of great timing to launch something like this, because real estate is a lot cheaper than it used to be, because it's such tough conditions right now. So especially when you're looking at build out times that can take 6 months to a year, in 6 months to a year, everyone's going to be vaccinated, hopefully, and you'll be able to go from there. And as I've said before, I like to do things that are more service-based businesses. So, especially like a lot of gyms and a lot of the industries have learned how to work with the pandemic now after all of this. Yep. And so I think it's important to like take those into consideration of that as we start to recover, we're also prepared for if something like this happens again.
Hmm.
And so that's really where I'm looking forward to this, is that the timing is just perfect for this. And again, this is what I've spent years doing, is helping
Yeah.
people select the right franchises that are recession resistant.
What are you seeing is going to be, a lot of people always ask me, what's the post-COVID hotel going to look like? Um, what is are you seeing any rustling in the wind with, we need to make those type of franchises different post-COVID? What are you seeing in the franchise world as far as the future?
Well, especially in the fitness area, that's an area where people were definitely not able to go for the longest
Hmm.
time, and so you see they're structuring things very differently, from how you book your appointments, how you enter, how the machines are cleaned, and so a lot of it's really being higher maintenance and making sure that people are safe by putting these new systems into place. That's what this is all about: new systems into place. And when you're comparing the average mom and pop to a franchise, one of the main things they specialize are systems in place. And so when you're talking about, hey, how do we develop these systems? How do we implement them? And how do we make sure that they're being followed?
Hmm.
Well, that's what franchising's been doing for decades and decades. So I think that you're going to see just new systems in place, but just
Yeah.
being perfectly executed by good franchisors.
And I agree with that. And that's why people do franchises instead of trying to do something on their own, is you have all these years of experience from the franchise that's doing all the R&D and all the research on how to make it cleaner, better, safer, putting the touchless, even like cashless type of things in place so that you don't have to think about it.
Mhm.
And so one of the questions is that, and what are the other benefits of, um, why should I do a franchise like this? Because I don't want to pay the 7%, and then it's just doing it on my own.
Yeah, well, honestly, this is a perfect example of what that 7% is for,
Hmm.
because you rely on the franchisor for support as things change. Like, this is one that has tested franchises as much as you can possibly imagine,
Yep.
but this is what they're there for: is that you invest on that because they are invested in your success. They
Hmm.
want you to do as well as possible, and so it's really important to make sure that. Sorry, my timer went off from the lights here. Yeah, that's what we're making sure of, is that people are going to be able to follow these new systems in place, and the franchisors are going to really be implementing the right changes for you.
Hmm. Now, it's very interesting that you're one of the first ones to come on and say, hey, you don't have to be accredited. We can take it, because a lot of people are like, oh, I don't know. It's like, so what was your decision based on with this model to not accept just only accredited investors? Is it to open it up?
So there's a couple different reasons. First off, is I truly believe that there's a way to change the way people invest and economies thrive.
Hmm.
It really, for centuries now, you've invested onto Wall Street, and it's made epicenters of these markets. But instead, what if your investments were going into the local communities, and you were putting your investments there? More taxes are being paid there. You're really investing in that local economy to thrive. So that's one big reason for it. Another is that I think that if you're trying to make a big change, you shouldn't exclude people. And so I wanted to open up to as many people as possible.
Hmm.
And then finally, it's a long-term benefit that's going to make the portfolios themselves stronger. So I call it the share effect, for FranShares, but also because we're sharing in these different things. So um, in this aspect, it's the sharing of marketing. Because one of the main reasons that companies franchise, that they want local boots on the ground, to be,
Hmm.
the local person there that's going to tell everyone about their business, and, hey, come on in, I've got the great shop. Now imagine, instead of one owner, you have 1,000 owners, 2,000 owners, 3,000 owners in your market. And so, anytime that someone says, hey, I was thinking about getting a haircut, my barber messed up, like, where would you send them? Hey, you know what? You need to go to Supercuts or Diesel Barber Shop. Oh, I got a ding in my car. Go to Mako. You're going to tell them to go to companies that you own. And on top of that, from like a social media standpoint, the franchisors support all of these franchisees to, hey, here's the right things to say. Here's how you post them. But at the same time, a lot of times it's, hey, customers might support it. The owners are going to promote it, some of their friends and family. But if I've got a couple thousand local owners and I, send something out to them and say, hey, your investment just made a post on Facebook, I think they would like to engage with that because a quick like is going to help them increase their return on investment. So I think what you're going to see here in the future is not only a great investment, but you're going to see the most profitable franchises to exist in every franchise system because they have so much more local support than any other franchise will.
That's a very good point, and exciting, because that's really what people need now. What communities need is that local support. I'm seeing it in our market. I'm sure throughout the nation, we're seeing it, that just support local businesses, especially during times like this. So your potential investors and your investors, how are they getting paid? What's the, they invest in the fund? Is there a preferred return? Is there a yearly, what
So
are they?
I can't say too much about that because we're working on SEC registration,
Oh,
and so last thing you want to do is talk before. That's why we're actually doing the wait list right now.
Yeah.
But it's going to be a share of the income that the franchises produce, as well as equity in the business. So we're hoping that we'll be able to sell the franchises in a 5 to 10 year time frame. So in addition to the recurring revenue from the franchises, you'll get that payout at the end from when we sell these extra businesses and then start new funds for them.
Wow, it's fantastic. It's kind of mind blowing that you've taken it. Congratulations.
Thank you.
That you're like, I can take something that I've done very well, and I can just kind of blow it up. It's fantastic. So in closing, I know everyone's going to want to go to your site. How can people find you, connect with you, get to know you?
Yeah, so there's two main ways. First off, go to the website, FranShares.com. And we actually have the wait list going right now. In just a few weeks, we've gotten hundreds and hundreds and hundreds of people on this wait list. And for an offer for Richard Geek listeners, because I love this podcast, it's my third time on here. Every single person who joins the wait list from the Richard Geek, they are guaranteed to be invested in this fund when they're ready for it. So even if we get that wait list out to 50,000 millions, the listeners that sign up from this are getting on there. So, and then secondly, connect with me on LinkedIn. I love posting on there, talking with people. I'm always very easy to engage on there. So just find Kenny Rose on LinkedIn, and those are the two main ways to find me.
Fantastic. And FranShares, FranShares.
Perfect. That's
FranShares, everybody. Check it out. You're guaranteed to be on, and you're guaranteed to have a great time getting to know Kenny Rose. Thank you again, Kenny. I appreciate all that you've done, and we hope your success is plentiful and that you have a happy holiday.
Thank you. You too. And appreciate everyone listening.
Okay. Take care, everybody.